Cool. I'm excited to jump in and talk about why tokenized stocks and passive earnings go together and why I'm so excited about tokenized stocks and just generally real world assets. And I'll explain how the two go together and what they are. So let's jump in. So yesterday, the CEO of Robinhood made a big announcement in terms of stocks and real world assets are going mainstream in terms of they're going into the Robinhood app, and anyone can basically take what they own in terms of Coinbase stock or stock in Uber and put it on the blockchain. That's a big deal. And it means that more assets are coming into the crypto system, which means that you can do more with your kind of real world assets like bonds, Uber stock, etc., and take them into the crypto world. So I think that will mean more trading and activity and higher passive yields if you're on the sideline, because there's going to be more trade activity. So let's just take a quick look. Before we jump in, this is all focused on that kind of passive activity. So it's a huge market to earn passive income in terms of the $100 billion crypto lending market, all based on people borrowing and lending. But if you have cash and you want to earn returns while your cash sits idle, Nook is a good option to save money on the side and see your earnings grow at a rate that's roughly 3 times of a bank account. And so we're going to explore kind of what powers the market behind Nook and the real world asset phenomenon today. So what is tokenization? What are real world assets? Tokenization allows you to take your real world assets and put them on the blockchain. So get them involved in crypto. So they really make it possible for you to basically take whatever you have in the world, real estate, treasury bills, private credit, Uber stock, and put it on chain and let you trade that. So if you have $100,000 in Uber stock and you want to borrow against it, you want to trade against it because you think that Pepe or Dogecoin is going to go up, you can now do that. And there's 3 main use cases, but there's the ability to use collateral. So you can borrow cash against it. You can trade or transfer it in terms of, again, like you want to trade for Pepe coin or use that as leverage to trade. And then there's also yield strategies. So if you want to stake or lend it out, you could. And that's where this conversation comes in. Quick recap on real world tokenization. This diagram I found super helpful in terms of you're basically going from the off-chain world or in the real world to the crypto world. And that's all done by just determining the value, specifying kind of who owns this token and how much of this token there are. So if you're doing, Coinbase Uber, for example, you're tokenizing that stock. How do you get it onto the blockchain? What are the off-chain agreements? And then how do you define that in terms of the smart contract? So there's a few different ways to do this in providers, but basically it's a series of steps to go from paperwork to code to get your assets from the paper world and PDF world into the smart contract on chain world. I won't dig too deep into it, but basically anything that can be defined now in paper can be defined on the blockchain and then kind of traverse between those two worlds. This is really big because Robinhood unveiled this and it's created a lot of excitement since in the kind of traditional finance world, but then also in the crypto world. So how is this good? Why does this make a difference for anyone who wants to earn a passive income, right? If you're like, hey, I don't own a bunch of Uber stock. I'm not trading Uber stock in the real world or in the blockchain world. It still makes a difference for you. The main 2 differences is that now there could be more borrowers. So if you take that $100,000 Uber stock and make it available to borrow against, you now have more people borrowing on chain. More people borrowing on chain drives up demand. So the higher the demand, the higher the return if you are lending out your assets. So now you have more people coming through the funnel. The second part is it diversifies the opportunity. So right now, lending and borrowing is very dependent on demand in terms of crypto. And as you know, crypto can go way up, way down, very volatile. This could even it out. And so a chart I always like to look at is list the past performance of one of our favorite earning pools. And you can see the rates go very high and they go back down to low. So you're always earning money, but sometimes you're earning 20% to 30% APY. Sometimes you're earning 3 to 4%. That's all dependent on the trade activity. But if you were to bring in non-crypto activity, so the trade of Uber stock, Target stock, Walmart stock, much more reliable things, treasury bills, bonds, etc., you might not see it as spiky. So you might always get 8% every day or 9% every day versus 3% one day and then 7% the other day or 10-20% the other day. So it could basically make the lending and borrowing world, which we see today is very profitable but volatile, a bit more reliable and stable. So I'll pause here for now. I think there's going to be a few interesting threads that kick off from here. But if you want to learn more about Nook, check out our website. It's a good way to get started, even if you didn't understand everything that we went into here today. I suggest that you start small and start simple, but get started soon. Thanks.